Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency, and we start with the euro dollar. So on Wednesday, the video, I was saying I would like to see a pullback to these fractals around 118.80 for a bounce up to about 111.25. We did get a bounce there. I think we got a little retracement there for a follow through. The target was a bit missed though, but still making a move of about almost 35 pips there. And I think that completed a five-wave pattern like this. 1, 2, 3, 4, 5. This being a wave 4, 5 here, 3, 1, 2. That completed a bigger wave 3, and indeed creating some kind of impulse to the upside, I believe. 1, 2, 3, and we had an ABC here for 4. So I think that the price patterns are confirming an impulsive wave 3 to the upside. I think that they fit what I would expect down here, where we had the 5 wave to complete wave 1 and an ABC to complete wave 2. And we were talking about the fact, that it could basically be a wave 3 up here. And I think that the momentum here, correction momentum, is confirming that. So far, we've seen most recently a bigger correction again, but price is staying sideways. It is really not retracing that deep. It is quite corrective, and I think that the corrective pattern is confirming what we expect for some type of wave 4. So this wave 4 is already over, right? And then we had to push a higher high for wave 5. So we can put the fib on a different swing now. We can put the fib on the entire swing up, all right? Because this 1, 2, 3, 4, 5 completed the 5 in my view with a 1, 2, 3, 4, 5 in 3, okay, like this. And we had an ABC in 4 and up for 5. So that 5 wave completed, I think, green 3. We had a green 1 and 2 here. And now we had an ABC, I do believe, like this in green 4. A, B, C like that. So we're looking for a bullish continuation. So if price does get back to the 38.2 fib and 144 EMA, that would be a bullish bounce. And bullish bounce support, the support zone, and I do expect the price would turn back up at 118.50. That was also a resistance level in the past. I think that will be support now in the future, even the 50 fib. But if it breaks below the 50 fib, then of course this bullish outlook, it doesn't look good at all, and something else might be going on. That would be a semi-invalidation spot. The full invalidation spot, however, would be at the top of wave 1, which is where, of course, the wave 1 is invalidated. If the wave 4 goes into that, it is not a typical 1, 2, 3, 4, 5 pattern. It might still be a leading or a leading or final diagonal, ending diagonal. Sorry, getting my words mixed up here, but that seems unlikely in this case because of the small wave 1. So that would invalidate it, basically, if it goes that deep. So as long as price stays above this support, it is looking, and this 23.6 fib, it is looking bullish, and I expect a bullish bounce to happen. We might not get that deep, don't get me wrong. This could be completed, this ABC, and we're up for an uptrend. In any case, if it looks like we're getting a breakout. If I'm going to trade this breakout, then I'm going to put my stop loss below these tops here, below 118. So it's quite a spacious stop loss, but it's a safe one because just in case this is an ABC pattern and it starts to turn here and go down, we should get a bounce into 38.2 fib. So my stop loss would be safe. That's how I see it, at least. So yeah, this 5-wave pattern went. Let's put the fib on the wave 1. As you can see, went neatly to the minus 161.8 target, and that's what we expect for wave 3. So that's why it's quite likely that this is 1, 2, 3, and this is 4. One of the reasons, one extra confirmation, is the fact that it went to that target, at least that target, at the very minimum. So that's good. All right, so how about this break? Well, this break, candle close near the high, candle close above the 21 EMA high, all of that helps. This is the second break. This is the first break. The first break is not that great in this case because of the ABC pattern, the potential for that, and it indeed happened. So the second breakout is much more sturdier. What I would like to see probably actually is not only the break, but a flag on the 50-minute chart. That would help me a lot with trading this breakout afterwards, or even a good 4-hour candle close near the high, or a 4-hour candle break above this fractal. All of that would help me with a good candle, a 4-hour candle. All of that would help avoid bad entries, because just because it's a wave 4 and we're going up for wave 5 doesn't mean that this is a good entry. As I said, it could go down to the 38. I think that's even a better entry, but I'm not sure if price is going to get that far. So that's kind of the tricky thing. Do I take the breakout here with the risk that price might go to the 38? Or do I wait for the 38 with the risk that it might not retrace that deep? This is a little bit tricky. That's always kind of tricky with the wave 4, specifically if it doesn't go down to the 38.2 fib. So that's why it's better if it goes to the 38, because that kind of debate is behind us. Now, I don't know. And therefore it's good to keep an eye on candles, candlestick closes, fractals, patterns on 1 hour, 4 hour, 15-minute chart to get a sense whether that breakout is going to happen or not. Weekly candle was very bullish and broke way above the high of the week before. It closed near the high, so to me that's signaling more upside, that's signal strength, and I'm expecting a follow through, and I'm expecting a break of last week's high as well. So that's it. Those are my thoughts, my 2 cents. The target, well, the wave 5 should go, I think, at least to 119.75 in my view. 119.50, 119.75, 120, could even go up to 120.25 or 120.50. All those levels are potential targets. If I had to choose, I would just go for the minus 272 target of 119.75. Seems okay to me. But it's a small target, right? Because a break above 119.10 just gives about 65 pips. So, but that's, I think, a fair target. Also, the round level of 120, of course, has to be respected, or could be respected, or has to be taken into account at least. And if we put the fib from here to here, we see that it could go a little bit further. It could go to the 50 fib here at 120.25 as well. So that zone, 119.75, 120, 125 seems to be ideal. That's where the wave 5 wave pattern could finish for wave A of a bigger ABC. That's where a bearish bounce and bearish candlestick pattern could confirm a bearish ABC down. 5 waves up, 3 wave down, and another 5 waves up could take it up to the deeper fibs, where a bigger ABC down took place here probably, and we expect, or I expect, a bigger bullish ABC up to take place within a bigger green A, B, and then down for C. Maybe even D and E if it is a triangle pattern. Okay? All right, that's my view at least. Pound USD was a little bit different. It did not respect let's see, I think we were looking at the 78.6 fib bounce. It did respect the 78.6 fib bounce, sorry, but it didn't. There was no bigger bounce there. It was just a small bounce. And then it went into a triangle pattern. And that triangle broke to the downside rather than to the upside. So that's why it's good sometimes to wait for, in my view, a breakout of a pattern. Because I was bullish at the 78.6 fib. But if there's no breakout, no trade is taken and nothing is lost. So that's a good thing. The breakout actually went to the downside. It went to the 88.6 fib and even to the previous bottom. There we got a bounce at the bottom, and a retest of the bottom, and a double bottom at a bigger double bottom, in fact. Double bottom at the double bottom so far. So it is still potentially, because of the double bottom at the double bottom, still potentially within this corrective pattern. Not in a zigzag pattern, which was still possible at the 61 and 50 fib, 78.6 fib. That was really less likely, actually, but still something I considered. Although maybe I should have known better that was starting to become less likely, because typically zigzag shouldn't go to such a deep fib. So maybe that was a warning already. In any case, it's probably still in a bullish correction with the double bottom taking place here. The 5-wave pattern here. Can't see it too well. That time frame here, 1, 2, 3, 4, 5. ABC So are we in a downtrend, or is this an ABC of A and this is a B and we're going up for C? I don't know, to be honest, at this moment. I think that certainly I would keep an eye on resistance just in case this is a downtrend. So let's put a fib here like this. And I would certainly keep an eye on the 50 fib and 144 EMA at 137.70. That could, if it bounces there, it could still maybe be a good idea for a bounce trade. Just maybe back to the previous bottom. Or if it does break, it could be a full downtrend. Whereas upside, I would like to see only upside. I mean, I would only consider upside if I see a break flag above the 144.233 EMA zone in the 50 fib, and then a break of that flag. Otherwise, I think it's still risky. Yes, there is a double bottom. I don't think that this is a good spot, right? So close to resistance. And this is very strong momentum as well. So double bottom could have made sense maybe with this candle to trade it up to the 38.2 fib, but not right here in my view. So I would rather wait for a break and flag above this zone for continuation higher. In that case, if that happens, price could go back to the previous top at 139. All right, and there is some space there for an upside trade towards this resistance zone in my view. Okay. If it bounces at the 50 fib, if there's some strong bearish price action candlestick patterns, the 1 hour, 4 hour chart, I would think about maybe some smaller trade there to take the bounce and see if it can break the bottom. And if it doesn't, try to catch some profit as it bounces back up. But otherwise, it's a little bit tricky spot with the pound. A bit stuck in between a rock and a rock. So not really that great of a spot. I think if it's on the daily chart were to have a bearish candle that can break through the double bottom, it would be more clear that there's, and then I would, be more clear for downside, and I would probably look at lower time frames to look for bear flag patterns for more downside towards the 144 EMA. All right, so maybe my pound USD doesn't help too much today, but it's the specific spot that I think is a little bit tricky. Anyhow, wish everyone great trading. Check out elitecurrency.com for our education articles, our analysis, our live webinars, our videos, our manual SWAT book, ebook that I have with my course, our automated trading systems. All of that is there. So feel free to check it out, and hope to see you as a member, and see you soon. Cheers, bye-bye.